Welcome back. Welcome back to another price action or weekly price action review. Now, apologies, this is a late recording. Typically, I'd like to get this out on a Saturday, but as you know, life gets in the way at times, and unfortunately, you're not able to stick to your best laid plans. So, unfortunately, this is a bit late, but nonetheless, hopefully, there'll be some takeaways from this. So, a lot of this has been done. Time's been pressing this weekend, so I have, marks up the charts, but I'm going to just discuss the key takeaways on each time frame, some of the key things that I picked up over the week, and hopefully it will give you guys that typical comprehensive view on how I go about reviewing the week's price action. Okay, so on screen we've got the weekly chart. And I guess the first place to start would have been the economic calendar. So with the economic calendar, the reality is in terms of US news, Wednesday, Thursday, Friday, we had FOMC minutes, so not the statement but minutes on Wednesday, and then we had PPI on Thursday, coupled with the unemployment claims, and then we had PPI on Friday. So based on the economic calendar, naturally we're expecting the volatility to inject into the market on Thursday and potentially Friday. So for me, my initial approach to the week was likely that we would see the low of the week form on Wednesday, Thursday, with a move higher towards the higher time frame draw. Now the higher time frame draw, as you can see, was this old high here, and we're going to get into why that was. So following last week's price action, this week here, we noted the IRL to ERL. That's what we were anticipating as the draw, which would have still have been the previous week's high relative to this week. Price traded down into consequent encroachment of the BISI weekly, and then we've seen this rejection higher, where it rejected back off the high and back into the weekly range. So a bit of an indecision candle there. However, one of the things that one of the things to take away as an observational note, and sort of supporting the key characteristics of determining institutional order flow, is the fact that, as you can see, the bodies of the candles here not closing inside of this BISI. So that's a clear indication of bullishness. So heading into this week, the anticipation would have been potential trade lower Monday, Tuesday, and then we see that injection in volatility come Wednesday, targeting the external range liquidity, this high here. So that would have been the draw. Okay. So as we can see in terms of what did happen, the market did trade down. Now, it probably traded down a lot lower than what I would have been anticipating, but ultimately traded down to reclaim the imbalance before rejecting just above CE. So didn't quite get down to CE, and then expanding higher towards the external range liquidity draw, and ultimately closing bullish on the week. So I was looking for confirmation that institutional order flow is bullish, and so we would look to frame a high probability trade idea in alignment with that higher time frame. So we'll be looking for some form of cracker correlation at the lows, at a logical support level, and then we want to see higher prices. Okay, so we drop down to the daily. Not too much more lipstick on the charts here for this one. Okay. So as we detailed on the weekly commentary, was anticipating the higher prices to the draw. We can see that we've got a low resistance liquidity here. Would have been old SMT. But ultimately we're anticipating the higher prices to this weekly draw on liquidity, following the rejection here. Now, Tuesday, we can see, Apologies, my screen's auto turn off is about to kick in. So Tuesday, Monday. The market traded down, so we can see here into the BC. But as we can see, the bodies of the candles are still respecting. Okay, this one here probably just slightly overshot the high, but ultimately the bodies of the candles are respecting the high of the BC. And that ultimately is important because it's indicating support. And then we can see on Tuesday how price dropped lower, took out the previous day's low, which we'll see more clearly on the 4-hour. And we had this SMT at the lows, higher time frame cracking correlation, and ultimately the market has displaced higher. So daily institutional order flow remained bullish, and that's obviously the case from the imbalance. And it supports, trade ideas to see higher prices until we tag into this high time frame drawn liquidity. And then we would want to see clues as to whether the market wants to reverse or potentially continue higher. Okay, so important takeaway here is once we saw this, this high time frame SMT within this weekly imbalance, we can then take away that it's highly probable, if you get all the confirmation signals of where the draw is going to be. You've obviously got this old high here, and ultimately the weekly drawn liquidity. It's not to say that it's going to get to that weekly drawn liquidity during the week. It's not to say it is, but there's a heightened chance that that is likely to be the case. Okay, so that's what I was framing. Now, come down to the 4-hour where it just gets a little bit more choppy. So again, we've got the SMT at the lows here. You can see that the market traded down. So again, we know where the draw was. Monday, the market traded down and ultimately traded down into the BC weekly. Okay. But naturally on a Monday, what I'm waiting for is the confirmation of the true week open, which occurred here. Okay. We then obviously had the confirmation of this high time frame cracking correlation, and the market repriced higher, trading through the CB here. Once closing above, that essentially gave us the indication of higher prices. This SMT here, once confirmed, would have presented a high time frame model. Okay, and so once we had the confirmation with this candle trading above and closing above this CB, that formed this balanced price range. And so the idea is that we shouldn't see price, if we're bullish, we should not see price come back to this level. Okay, so we've two things in here, the balanced price range and the inversion fair value gap traded through, so we should be seeing higher prices. The market continued then to trade higher, as I said, closing above the CB. But the key thing here, if we look at this CB in here, we can see accumulation took place of shorts. So this is high probability. This CB is high probability. If the market trades above this, there's a level of mitigation that's going to take place. Okay, it's a key PD array that I was monitoring. It wasn't the only thing I was monitoring, because naturally we have we've got the whole hold on. Oh, that's not correct, is it? Let's just that's better. That should be like this. There we go. Better. Okay. Because we've got the inversion fair value gap overlapping with the BC. So this is a real key area where we would expect to see mitigation of the left of this side of the curve and accumulation of further longs is what essentially took place. So this was an area that naturally I'm watching to see, do we get confirmation of higher prices? Excuse me. Okay, so market consolidated, accumulated inside of here, and then ultimately confirming bullish order flow and displacing higher. And then from here we can see that it displaced higher to purge and tap and engage the liquidity above that key high that we were looking for as our high time frame draw. The market then obviously consolidated. Did note this high time frame SMT, but it was late in the week. Not much of a retracement here to really frame anything to see lower prices. Okay. So key things here was the BPR. That was a clue for higher prices. Unfilled fair value gap in here. Then we ultimately traded through this CB here where we can see accumulation of shorts had taken place. So we wanted to see a level of mitigation. So traded through it. We came back into it to accumulate further longs and mitigate the shorts from in here. And then obviously the market is displaced higher, seeking the liquidity above the marketplace. Okay, let me just take a quick drink. Okay, so dropping down to the hourly. Let's just get this in here like so. Okay, so what we can see, so the market opened on Monday, immediately trading lower and setting this SSL London. So trading lower below the true day open, setting the SSL London. Then it then reprices higher, and this is where we see the accumulation for shorts inside of that CB H4, and then the market displaces lower into the BC weekly, and then ultimately consolidates for the remainder of the day. Okay, but what we also see headed into, well, I guess it's that is Tuesday, is where the market formed the true week open. So market created the New York low, traded higher, then this candle here created the true week open, then we trade lower and we purge the liquidity below this level here. Okay, and that essentially sets the stage. Oh, excuse me. Sets the stage for a model. The market then, obviously, as we can see, consolidated heading into the day. So true day is obviously over here, but if you want to take it from midnight New York time, consolidation, we can see a purge then of the SSL H1, and the market displaces higher, targeting this H4 liquidity pool here, where it continues higher, setting the high of the day, and then we get this retracement back into the range slightly, or back into the key. Excuse me, bit of a cold this weekend. Okay, trades back into the BC, but obviously the overlap with what the SIBI would have been, but now it's a different version of fair value gap. Okay, so then we head into Wednesday, where the market opens, reprices lower below the true day open, and into that overlap of PD array confluences. Okay, then excuse me, wanted to see if the market finds support at this BCH4. Now, naturally, you're looking. I'm looking for SMT, but you're not always going to get it. So I wanted to confirm whether order flow is still bullish. And the way I would confirm that order flow is bullish is by looking at time frame alignment. It's a H4 BISI, so I'm looking at the M15 time frame to see, do we have market structure to support higher prices, which we did. The market then displaced higher, leaving this fair value gap before we saw this small consolidation, and then formed SMT in here with NQ at this imbalance before then displacing higher and ultimately purging the high time frame liquidity pool, and not so much the high of the day, but forming the New York high. We then see how the market replaced back into this BISI, again with SMT with NQ, and then a short-term move, take out this high where it forms the high of the day, and then we see this consolidation. So a couple of opportunities in there. This was the main opportunity. So Thursday, again the market opens, trades low below the true day open, before we see it consolidating and then trades higher on the news, CPI wicking above this H4 liquidity pool. And then ultimately repricing lower to form this H4 liquidity pool at the lows. Okay. Then ultimately we can see how the market sort of consolidates but reprices higher. We get high time frame SMT here again with NQ during the start of the New York PM session. That can be a model in itself. And that set the stage for a model lower, targeting the H4 liquidity pool, which it tapped into. Then we see this rejection, low time frame SMT here. We see this rejection, and the market essentially just consolidates for the remainder of the day. Let me just grab a quick drink. Okay. So it consolidates for the remainder of the day, but also forms this H4 liquidity pool, close out the day. Okay. So then on Friday, the market opens and again trades lower below the true day open, back down into this BISI H4, where we can see a lot of reclaiming of this key price level is taking place. Again, I ultimately wanted to see SMT down here, but that didn't happen. So I'm now looking for SMT, M15 structural signature to confirm bullishness, which we got. So it confirmed H4 institutional order flow is still bullish. The market then formed this low time frame SMT, not a model for me, and then ultimately displaced higher through the old high H4, through the previous day's highs. So a lot of stacked liquidity above here, but as you can see, we were in this range accumulating, and then we've traded higher, so we've purged liquidity. So there's going to be a lot of liquidity resting below here. We can see that we'll have low resistance liquidity run here. So this SMT that formed late in the week, that could be the catalyst for us to see lower prices. Not necessarily saying we're going to close below here, but certainly this liquidity would be of interest. Okay, and that's essentially how Friday formed, repricing higher, purging the liquidity. Then we saw this consolidation. Should really there. So Okay, there we go. So purge this hourly liquidity pool, SMT at the highs, and then that sets the stage for lower prices, and that's where we closed. So this was a very interesting week. It was going to be one of few opportunities, but opportunities nonetheless. Um, Probably for me personally, it was one opportunity in this area here. But there may be other opportunities for others, but for me, it wasn't the case. But these are the weeks where you got to be really careful. You got to be almost surgical. Take what you can get out. Really try to frame high probability positions, utilizing all the elements of what I've discussed and the things that you have in your own trade models. But ultimately, the key thing then is to document your takeaways and of the things that you found out during annotating the chart, things that you've seen, because again, I say this all the time, you can now take a step back and have a look at the market, and typically it presents a completely different vantage point of what had happened than maybe whilst you were really engrossed. Now, I find that during the trading day, I, in my notebook next to me here, I timestamp, the day of, when the candle's printing, whatever time it is, and I'm actively documenting in my journal what's happening, and it allows me in the moment to step back and have a look, because I'm documenting something. I'm not just engrossed in seeing it at face value and really sort of immersing myself into every ebb and flow of price action. I'm documenting what I'm seeing. So for instance, as a given example would be say we were somewhere around here and into the New York session. So I may have said if I'd come to the chart, let's say at 8 o'clock, I may have said, at 8 o'clock, market traded down into the BC H4, overlapping with the inversion fair value gap, noted the M15 bullish breaker, supporting price higher. The market displaced, leaving this BC H1. Currently, prices respecting the BC. Want to see if I get a model of some sort to support potential higher prices, and then maybe you've documented that, and then you're waiting for, I don't know, maybe you're waiting for equities open. Equities opens come, so you'd write 9:30. You're observing what happens, because ultimately you might be getting an opportunity to engage the market, but assuming you didn't, for argument's sake, you might document and say, equity open, market traded lower, however did not form a cracking correlation, so remain impatient. You might write that. But if it is a point of where actually this could be go time, because again, you're monitoring the price action first and foremost, you're making the notes after the fact, just so that you are keeping your mind engaged, but also, I would say, keeping some form of self-awareness about what's going on in the charts. It just helps you remind yourself so you're not so engrossed into the chart, but you can just take that step back. I hope that sort of makes sense. But I think it's important that if it's time to engage the market, then you don't want to be spending the time writing notes. You want to engage the market, because you know what you're looking for based on the things that you're writing in your journal in terms of what's happening. So you know what you want to see next. So if you're going to start seeing the things that you want to see next, then you don't want to be writing in your journal. You want to be getting ready to execute as per your edge and your rule-based system. So that's just something to bear in mind. It's something that I do, and certainly it has helped me take steps forward in my trading journey, where you start to feel really comfortable about the things that you're doing. and those things that you feel comfortable about, they often feel right. And when they feel right, you want to do it again and again and again and again, because typically they will yield the results that you want to see. So, as I said, that works for me. Not to say it works for everybody else, but certainly take stock of that, and maybe it's something that can help you. So anyway, that's brings us to the end of this. So make sure you document your key takeaways, as I said, and then just read through it again just to make sure that there isn't anything that you've missed, and then prepare for the week ahead. So I'm going to leave this one here. It's quite late in the day over here. It's going to be an early start tomorrow. Get ourselves locked in. As some of you may know or not know, I don't trade Mondays. I like to see Monday print. Maybe if it's a week where we've got FOMC or CPI or something on a Wednesday, I may look at Monday, but typically I tend not to. So anyway, hopefully you've taken something away from this. Again, if you like this style where the charts have been marked up prior, and I sort of just make some really rough cut amendments here and there, and I'm sort of just voice overlaying the annotations that have been done in the past. It does keep them a lot shorter. Let me know in the comments if you enjoy that, or whether you prefer the raw long form where the chart is blank and I start marking everything up and discussing things as I'm going along. If you prefer that, again, get in the comments, let me know, and I can certainly do those as well. So anyway, have a good rest of the weekend. Next week is a relatively quiet week, if I recall. I think there's only one day that I believe has any real Thursday. Well, actually, tomorrow's a bank holiday. I think it's Columbus Day or something like that in the US, I believe. So yeah, certainly no trading tomorrow. Tuesday, Wednesday, nothing going on, and then Wednesday Thursday we've got some news. So it could be a quieter week, the early part, and then we start kicking into gear at the end. But if opportunity presents itself, just be ready to execute as per your model. So with that, I shall leave things there. Again, hopefully you took something away, something useful that you can implement into your own trading processes, and I will catch you guys next week with another weekly price action journal.